This podcast is for informational purposes only and does not constitute legal, tax, investment, financial, or other advice. It is not intended to cause or induce breach of an existing agency agreement.
Hello? 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 This is the Vancouver
Commercial
Real Estate Podcast.
And welcome back to the Vancouver Commercial Real Estate Podcast. I'm Cory Wright.
And I'm your other sometimes host, Matt Scalina.
And Matt, not just sometimes host, but William Wright Commercial officially is adopting you for the weekend. We're bringing you to our annual William Wright retreat in Whistler for 3 days.
I thought you were going to say William Wright mascot. I am excited about this. We're headed up tomorrow, Whistler, golf, Scandinav
Spa,
the Scandinav
lunch
Spa.
in the village.
Oh my
dinners.
God. It's exciting. It's exciting. And it's a great group. I'm really excited to go. This is actually the last thing in my calendar before I'm basically mentally checked out for a couple of days here. So it's going to be good.
This will be good.
But who do we have on the show, Cory? This is exciting.
It's a great show. We have Meg Cooney, Liam Simpson, no relation to Bart.
Go on.
Seamus Bailey, all from our Vancouver office, all land and asset specialists. They're talking to people on a daily basis that are buying and selling in this corridor. We take an approach from a commercial angle.
Yeah.
I caught your show last week. Great show. Really, really good approach to it. Really well done. Clearly, you saw the schedule we had coming up. So you thought, hey,
we got to get ahead of you.
We got to get ahead of that one. I get it. But really good show. The two shows complement each other. Two different approaches to it.
Yeah.
And it works out really well. And arguably, which could be probably the biggest decision in Vancouver council history.
I agree. I think the different angles are really useful. We had Kit Sauter on talking about the Broadway plan, largely from a kind of what the city needs and why and the politics around it. This is really interesting because Meg, Liam, and Seamus unpack it from that in-depth knowledge based on relationships they have with the people that are actually going to have to build this stuff. And does it actually make sense? Does it pencil out? How onerous are the conditions that City of Vancouver are putting on developers? Really interesting conversation and some opportunities as well.
Yeah, for sure. No, they unpack a lot. And like I said, they're talking to people on a daily basis that are buying in this corridor, selling this corridor, potentially developing this corridor. So they've got a lot of great insight information from the commercial side of the world of how it all sort of unfolds itself. And they kind of supply that to us, which hopefully gives the listeners a really good insight to it.
It does. And, not to spoil it, but one of the big takeaways, there might not be that much change to the Broadway corridor for a while.
Yeah. Well, one thing too, people have to remember too, is this is the city's OCPs are visions, right?
Right.
I mean, like they're not necessarily going to come to fruition as they foresee. There could be amendments, there could be changes, but really it has to be a combination of sort of a city vision coupled with private sector money. And the private sector money is obviously the development world. And then hopefully those two mesh and come to fruition together on a timeline that works well for everybody.
Right.
I mean, a lot of these things too, sometimes can take years. Like if you look at the Cambie corridor, I think the first study was 2001.
Mm-hmm.
Was the first study they did. And then they passed it like late 2007. And then you finally got to get a decent amount of development like in 2013. Right. Fast forward 2022, a lot of it's done, but now we're into the third phase. So these things sometimes take 10, 15, 20 years to come to fruition. So there's not going to be a snap of a finger and overnight you have the results.
Absolutely. Well, maybe we should cut to our talk with Meg, Liam, and Seamus from William Wright Commercial. I really enjoyed this conversation.
It was a great conversation. Very, very knowledgeable individuals. Very lucky to have them on the show today. Enjoy, guys. This week's episode is brought to you by our great friends at Impact Commercial Group.
Really enjoy working with Impact Commercial. And we should say Al and his team can basically do anything when it comes to lending.
Anything when it comes under the commercial umbrella. You're building a building in development, we got you covered. You're buying land, we'll make that happen for you. You're investing in a property or multifamily building, check. Owner-occupiers looking to acquire their own space, double check. Anything commercial financing you need, Impact Commercial is your go-to.
ImpactCommercial.ca. And we should say, over 50 years of combined experience. So trust these guys. They're the right fit.
Best in the business, in my opinion. All right, we're here today with Liam Simpson, Seamus Bailey, and Meg Cooney, all from our William Wright Vancouver office, all work in the investment sales and land specialists within the city of Vancouver. Guys, how you doing today?
Doing well. How are you, Cory?
Good, thanks. Meg, you've been on the show before, so we're welcoming you back. You're one of Matt's fan favorites, as always.
Past guest fan favorite,
Past guest
Meg Cooney.
fan favorite. And then
but I'm not co-hosting myself today.
No, it's okay. That's okay. It's kind of like when you come and do the co-hosting stuff, that's kind of like when you're like the guest on Saturday Night Live, where you're also playing, you're the guest, the host, and the musician. Today, you're just a musician.
Yeah,
that actually makes a lot of sense.
Yeah, which is totally all good. And then we have Liam Simpson, and Liam, for our listeners, any relation to Bart?
I've been asked that my whole life, and I'm starting to believe it now myself. So maybe we got to look into it. It should have been an interview question when you hired me, but we'll address that when it comes up again.
He submitted his 23andMe, so he's waiting for the results.
And then we have Seamus Bailey. So guys, what we'll do is we'll give you a chance. So if you guys maybe want to tell us about yourselves a little bit, and we'll go 1, 2, 3 through the list. So Meg, why don't we start with you? Tell us a little bit about yourself.
Yeah, so I have been in real estate for 10 years now. Got my start in pre-sales, selling condos for a developer. And then I transitioned into commercial in 2015 and have been doing that ever since. So yeah, my focus is on investment, sales, and land.
I'm Seamus Bailey. I've been working with William Wright for the last 3 years or so now, focusing on land and investments along with Meg and Liam here. My background is in economics, so I do a lot of the underwriting for the investment and land deals that we are looking at or working on, listing, etc. And, pretty excited about the Broadway plan.
My name is Liam Simpson. I joined the firm just over 2 years ago now. I've been working with Seamus and Meg. We started off bouncing around to a lot of asset classes, and then we gained a lot of traction with land and investment. And it's been a really interesting asset class to work in the last few years. So a lot of excitement, and that's why we're here.
Fantastic. Well, maybe we'll start, guys, with a general question, and it may be too broad, and whoever wants to tackle it. But for listeners that aren't that familiar with the Broadway plan, what is the Broadway plan?
Yeah, absolutely. So the Broadway plan was initiated in 2018 with the goal of increasing environmentally sustainable buildings, tackling housing issues, and creating sustainable transportation. So the scope of this of the area spans from 1st to 16th, Vine to Clark. It's around 2,100 acres or 480 city blocks, and works into Kitsilano, Fairview, and Mount Pleasant.
Yeah, just to add on that as well. So, this really started when the Broadway subway extension, was in talks in 2014. So it's been a long time, buzz and attention towards this plan. Yeah, 2014, the Mayor's Council vision was approved, which includes the Broadway subway extension. They then focused on the project design and the funding. And then, yes, in 2018, that's when the plan started to come together and come to life. So, yeah, definitely a long time coming, almost 10 years.
Broadway is a commercial corridor, right? Cory and I were talking before we called you guys, and 1 in 12 jobs in Western Canada is, which is a crazy stat in my mind, is located along the Broadway corridor. We've talked a lot about increasing housing density, which is greatly needed in the city. But what does the Broadway plan offer from a commercial standpoint?
Yeah, so, in terms of figures, they're looking to create 42,000 additional jobs within the corridor. So currently they stand at about 84,000, exactly 50% increase in job creation.
Oh.
Yeah, so it's, pretty significant. The whole area is about 2,100 acres of the whole plan. So, this is by far the largest comprehensive area plan undertaken by the city of Vancouver. And, I'm surprised this is all of BC. So, very significant to be so close to that.
Yeah.
They've also kind of identified a lack of office space along the Broadway corridor. Driving around, you will see some office towers on Broadway, but you don't often see the really dense towers that you would see downtown. And that was part of a big focus for some sections of the plan anyway, specifically around kind of the Cambie and Broadway station. They've outlined a lot of office towers with significant density, 30 to 40 stories with retail at grade to, have some kind of liveliness to the development. But we would anticipate an enormous amount of demand for that area. I mean, anecdotally, a lot of medical users I know love to be around that part of town, and there's just a complete absence of product for them to lease in the area and operate their business. So it was really awesome to see the city of Vancouver notice that need and implement the changes that need to fill that gap.
Yeah, and just to add in there as well, more specifically, the city is targeting the 6 station areas around where the Broadway line will connect with upper level Broadway. And those will be the areas where we see the most significant density and a lot more office allocation.
So one of the controversial things with this plan, and has been talked about from a controversial standpoint, is potentially the lack of density of housing. And I know a lot of the density has been concentrated around those 6 SkyTrain stops. What are you guys seen, heard, talked about with regards to like the housing aspect of it from a development standpoint? And I guess a follow-up question that would be is, from the housing standpoint, taking it from a perspective of the rental or purpose-built side of it, there's been a lot of talk about how there's sort of been an opportunity missed where there could be more density, especially in the housing markets around there. What are you guys hearing and seeing with respect to that?
I mean, definitely. Like we're quite active in this area, and we're always reaching out to developers to see which areas they want to go after. And prior to the plan being approved, the concern was that there really is not a space to build market strata for residential. And some developers are just not set up to build rental. They don't have the capacity to manage it once the project's done, or they're more merchant in their process where they need to cash out when the project has completed. So, there are a lot of developers that are completely steering clear of this area just because it's so de-incentivizing to build market strata. And, that really is highlighted in the DCEs. So I'm sure you guys have reviewed the policy, but the DCEs are ranging anywhere from $330 to $425, depending on the area, per square foot of additional density that you're granted. And this is essentially like a rezoning tax that developers have to pay. Mm-hmm. So when you add costs like that, they either have to push the revenue side, so increase the sale price of these pre-sale units, or they take a loss. So, there really isn't that incentive to build market strata. And I think that's pretty clear that the city wants to see more rental, but there really isn't a space for it.
So Meg, for our listeners there, can you maybe go into it a little bit more? You mentioned there about the DCEs with regards to developers and additional density. Can you go through a little bit maybe and just break down what that is? And then maybe also just touch base on what a CAC costs are. These are some costs that the developers have to, obviously pay. Can we maybe just break down what those costs are, and we can explain for the listeners where that money goes?
Yeah, so a DCE is Development Contribution Expectation. And, this is a revenue generator for the city and, would be used toward improving infrastructure, amenities, upgrading, which obviously the Broadway plan needs quite a bit of, just given the overhaul of this area. So they're relying heavily on developers' funding. I think they projected about $900 million in DCE over the next 10 years to help fund the infrastructure changes and servicing changes that they need to support this amount of density. And so this cost being passed on to the developers, affects what they can purchase the site for. So, it compresses what they can pay for land. Construction costs are relatively fixed, but the only other factor or variable that they can control is the revenue. So it kind of forces developers to push the market on a revenue standpoint with what they sell these units for. And, whether or not the market is receptive to that, that's a huge risk for developers. And then just as, the community at large, there are likely going to be very few market strata projects that go forward in the Broadway plan because of this extra cost, making, limited supply in this area. So perhaps charging $2,500 per square foot of unit, that's the number that works for developers, and that's the only option for consumers to actually purchase along this area. So, I think that definitely guides the hand toward rental, which is, I suspect, what the city of Vancouver is aiming for, part of their vision.
If I understand, the plan is de-incentivizing strata and pushing developers towards purpose-built rental through the cost structure?
Definitely. On top of the costs too, in a lot of areas, like if you see in Fairview is a big focus of the Broadway plan. Policy is if you're replacing secured market rental, then market strata isn't even an option for you. So in areas like that where you walk around and it's a lot of kind of 3-story walk-ups from the 60s, it's not even possible to build market strata under the new plan. So in addition to the cost, they're using other policies to definitely push the rental rather than the strata like we might have seen on the Cambie corridor.
Yeah, and what may be seen as further disincentivizing from the developer standpoint is the rental policies on how to handle existing tenants in the area. So there's 2 overarching policy frameworks that are being put forward is that, developers will have to handsomely pay current renters to displace them in order to incentivize them to move out or find a new place to live, or include them in the new rental units at or below what they're currently paying. And because rents tend to stick with the tenants and are moved up very slowly over time, there's a lot more guesswork when you're initially looking at a site, and it might be more difficult to find value in that on the development side. That being said, there's also a negative side from renters in the area as well, where these policies are not seen as trustworthy. So there's a lot of interviews coming out from Vancouver Tenants Union, and they're essentially saying that they don't believe that will happen.
Right.
It just seems too complicated that a tenant who's paying $650 in rent on their unit cannot possibly live in a $2,000 a month unit and still pay that amount. They just don't see that connection. And the city is making these promises, but it's causing strain on both sides.
So I guess the one thing I'm thinking here is there's probably a decent number of people listening to this show that are thinking, when this plan passes, there's potentially going to be a frenzy amongst the developers to get in on the Broadway corridor. What you're all outlining, as I understand it, is a pretty tricky needle to thread here in terms of getting it right and actually making a profit. What are you hearing on the ground, and is there going to be a building boom along the Broadway corridor, or is this just too onerous to take on?
I think a lot of the larger scale projects are probably going to be put on hold to an extent until they figure out a viable solution on the development side. I think that when the first draft of the plan was released, there was a lot of excitement, a lot of interest from developers, perhaps even trying to get into some site prior to the plan being finalized. However, as they've refined their directions and there's been the public hall meetings and frankly the controversy from members of the community around that area, I think some of the hype has died down. I think there's also concerns in a bit of a gap, I guess, between existing landowners in the area's expectations and what makes sense from an underwriting perspective if you're kind of being shoehorned into building rental.
Yeah, I think on that point too, for the average landowner, hearing 40 stories, your site is designated for 40 stories, hearing the multipliers that were achieved on the Cambie corridor, for example, they're seeing dollar signs as vendors. And unfortunately, developers, they need to work their numbers too, because they're not going to pursue a project that will take them 4 to 6 years to, risk losing their shirt over it or not having enough profit to make it a worthy endeavor. So I think there is going to be a bit of a gap of expectations from vendors and what developers are able to pay. There's also the factor of assembly too. So a lot of the minimum frontages are 150 feet. And if you look at Broadway, each lot is approximately 50 feet. So, there's another layer of timing, getting, 3 owners in a row that all agree on value and all agree on the timing to sell. So I don't think it's going to be as, expeditious as we would anticipate. Even though there's been a lot of hype around the Broadway plan, I think it's going to take time to really see this revitalization and big changes along Broadway.
Yeah, and just one last point, an interesting thing that I did hear on the ground recently, and it's kind of what I was alluding to with figuring out a solution to close that gap, is a contact in the industry of mine who works with REITs and developers is under the impression and has heard discussion that likely the direction it will go is to almost pre-sell a development site, since there's so many developers who would be uncomfortable having capital tied up in a rental building for so long, unlike in a strata project where you can get some of your capital returned by doing pre-sales, things of that nature. Mm-hmm. They would have metrics that, big organizations like pension plans or REITs would pre-buy a big tower rental site with 150 feet of frontage, and then the developer is more so providing development services for a fee rather than directly buying the site and pre-selling the units like they would with a strata project. So whether that'll come to fruition or not is hard to say, but it's an interesting talking point given its rarity, I guess, in the current Vancouver development market.
One more point to add on. In light of all this sort of downward emotion towards the plan, at the same time, the plan is very, very large. And it does get quite specific, but at the same time, it also acknowledges that it might not completely cover exactly what is needed, and it might not know exactly what ends up happening in the area. There's 3 overarching principles in the plan, 9 in total, and the plan itself acknowledges that if a developer comes to the city with an idea, a proposal that encompasses the guiding principles of the plan, but kind of falls out of the scope of the plan itself, it might be looked at. So if I was a developer, I would kind of sit back and wait and see just how much that happens, how much leeway the city gives to developers to bring their own.
Yeah, and base it off of a precedent.
Exactly. Yeah. Bring their own interest to the area. But obviously that remains to be seen.
I was just going to say, but from what I'm hearing is kind of an amazing thing that the city it's like people criticize lack of transparency, inability to kind of for spot rezoning to figure out exactly what's going to get passed and why, and they go through this whole process, and then it's like, actually, let's business as usual. Like the plan is basically not all that important if you kind of know what you're doing and can shoehorn something past.
Yeah.
I think is one thing too that's important too is these are cities' visions, obviously, when they put forward these plans, and these things need to, they need to intersect properly with private sector money from the development world, and not all plans come to fruition in the timing that they want. You take a look at like Port Kells out in the Surrey-Langley area. That recently, probably over the past 5 years, has really gained momentum and really kind of built out, I think, to how the city wanted it built 20 years ago.
Right.
But they just couldn't get, developers on board with it. And I think right now, question I have for you guys, because you guys are on the ground and you're doing sales in these corridors, with this plan and the anticipation for this plan, considering interest rates are rising, construction costs are at an all-time high, supply chain issues are challenging all over the world. Are developers on the acquisition side, guys, maybe hesitant to get too excited just yet, considering the current economics that they have to work within?
Yeah, I think that's definitely a factor. The timing of the plan finally coming to fruition, I think we've definitely seen a little bit of a slowdown and some caution, especially in situations where it's unproven and maybe pioneering this area. Developers are still very active and they have to keep a pipeline, but I think to Liam's point as well, they might kind of sit on the sidelines here and see what precedents, are approved before being the first one to take that risk, especially with, all the points you mentioned, interest rates, climbing, construction costs, inflation. There's so much uncertainty in the market as a whole right now that adding plan uncertainty too, I think is also a factor.
Yeah. And with the rising construction costs, it is obviously a factor that's affecting most of the Lower Mainland right now. And when you think of Broadway specifically, it is one of the most expensive areas inherently to build. Typically you're on the higher end of quality, typically have underground parking and a lot of other complications. Amenities are much more frequent in the buildings as well. And it further disincentivizes with the DCE structure that Meg was talking about. A lot of sites are looking at interest rates, very common, much lower DCEs, DCLs, and CACs, and are still having a hard time penciling out those sites. So in the current economy and the way that, interest rates and construction costs are affecting these areas, it is going to be quite difficult right now, unless the site is of very, very premium, low value to developers.
That being said, though, I think, we definitely saw quite a boom or, a surge of activity along the Broadway plan in 2016, 2017, and that was kind of speculative at the time. Mm-hmm. So, I think there are a lot of developers that have holding sites, where they have been, waiting for a long time. They did pay a premium, and perhaps the site does pencil out now because they, probably got a bit of a discount just buying so in advance. So, I still think that there will be some activity and, some applications being submitted now that we're at the finish line. But new acquisitions, I think it's not going to be as rapid.
Yep.
Can we speak to any projects maybe that either have got the go-ahead now at this point or maybe even under construction or maybe, even further, maybe propose? Is there any exciting projects that have already sort of come to the forefront that are taking shape along this corridor in anticipation of the Broadway line?
The most exciting new project is probably the Granville and Broadway development by PCI. It kind of speaks to what Meg was saying about there being holding sites the developers have had for a while, and now they pencil out because they bought this site years ago now. So it's going to be a 39-story, mainly rental residential tower with, of course, the below market rental portion, the 20% figure that is becomes fairly commonplace throughout the plan, but it'll also have 5 stories of office space and retail at grade with a grocery store. So they're definitely going for that kind of community pylon, I guess you'd say, that you'd like to see more developments around it. That's not to say that they had an easy time. I mean, I think pretty much every month for the last, 12 months or so, you'd be reading an article about naysayers for the area saying it was too tall and it was going to ruin the community feel of the area. But it's nice that we have at least one large-scale project underway and approved to sort of set the precedent, at the very least, in that immediate vicinity, if not around all of the station areas, because that one will be kind of directly adjacent to a new Skytrain station.
Yeah, exactly. And as Seamus was saying about the station areas, I think this shows a very strong precedence for what's exactly in the plan as proposed. This is, it's between that 30 to 40 stories. The rental is exactly what the plan was sort of predicting would happen there. So it is no surprise that this sort of density breakdown did get approved. There's not much from this development that kind of stands outside of what we were expecting to see. It's just good to see that someone's jumped forward and has started the procedure of building something.
Just thinking about this, honestly, from my standpoint, it's kind of actually depressing, this conversation, in that a lot of people, we're in the housing crisis and it feels like we're getting to that, literally a breaking point where we just need more housing built, right?
Yeah.
And this, to me, I mean, the big takeaway, and maybe I'd be curious to hear your thoughts if this is a big takeaway, but is the city overplaying their hand here? Because, it will just, instead of, there being a bunch of new housing being built, and over the next, say, 3 to 8 years, we're pushing this down the line where, it's going to be a very slow process. The numbers don't work for a long time. We have to wait and see. It's very tentative. This doesn't strike me as the bold opportunity that I was thinking it could be. What are your guys' thoughts?
I would say, if anything, they're underplaying their hands to an extent. I think this is a plan that is extremely optically good for citizens of Vancouver, because it plays into a lot of the goals that city planners have, that so-called Vancouverism. They want green developments and community feeling. I think it's like we were saying, they've paid more attention to the optics of the plan than they have the incentives of the plan for those that would allow it to play out. I think to an extent it's a shame, and it may change over time simply because we are in a housing crisis and we desperately need more rental. But they have to realize, unless the city is going to undertake an enormous amount of rental projects themselves, then they have to make the underwriting work for a developer. Otherwise, they're either going to not move on sites or, wait for new directions of the plan to come out that make the underwriting come out a little easier. I guess one note of optimism would be the commercial sections of the plan are pretty exciting. The vast majority of it is rental residential focused. But I think there are a lot of developers, and we certainly are hearing that on the street, that are highly interested in the office sections of it specifically, because there is an enormous shortage. And so, we will see some building on that end of things. I think they may have missed the mark on the rental portion.
Yeah, and on the office portion as well, developers have the flexibility to build strata, which we've seen in Vancouver, have really strong demand, or they could build, rental product as well on the office side. So there's a little bit more flexibility there, and it appeals to more developers for that reason.
Yeah, I think building off of Seamus's point, it is exactly what the city would want to say. I think there's a lot of stretch from tenants feeling like they might be pushed out and don't have a guarantee on how they're going to be living. And I think a lot of developers are looking at this saying, we're just not going to be partaking in the area, especially medium to smaller development groups. It's just too much cost for them to weigh a brand name out there. I think a lot of larger developers might be able to take a little bit less profit just to get their name in Broadway. But it's not all doom and gloom. If it does come to fruition the way the city does plan to, and obviously there's going to be some missteps, it's going to be a very beautiful plan. It's going to be a very beautiful part of the city.
Yeah, absolutely.
Maybe as a final question, at least on my end, are there any opportunities? It sounds like if for the big guys, for the REITs, there's obviously opportunities, but for maybe mom and pop investors, somebody looking, are there any opportunities when it comes to real estate investment here for the little guys?
Matt's asking for a friend.
Yeah, Matt's asking
for a friend.
Are you the little guy?
I'll be whatever you want if you got a good tip.
I think, despite the doom and gloom on the development side of things, we are seeing a rush. A lot of the rental development designated areas, I should say, are already populated by those 3-story walk-ups that I mentioned before. And we are in a bit of a rush on rental rates going up. So while the development potential may not be immediate for some of these rental assets, I think there's certainly a position for, smaller mom and pop investors to still look into those multifamily buildings that are, a stable investment with significant kind of cash flow upside in place. And then, you have the exit in the end on the development arm as things progress. There may be revisions to the plan that make the underwriting easier. And in the meantime, it's not like you're sitting on a empty asset and just, paying the property tax all year. So I would say there's still opportunities there, certainly. I don't think you'll see any kind of development flips like you might have in the Cambie corridor and all of its hype back in the day. But somebody who's willing to hold something and enjoy the cash flow in the meantime and enjoy the stability, frankly, of multifamily. You almost never deal with vacancy in the Fairview area or really any rental in Vancouver. I think there's still good opportunity there.
Yeah, and on the commercial side as well, we have to look at how this plan will impact neighboring communities. It's going to bring a projected 50,000 people at a 1.4% growth rate per year, an increase in 42,000 jobs, the obvious Broadway subway. It's going to be affecting surrounding communities. It's going to be bringing a lot more people to Broadway. And how do they get there? They have to go through other communities as well. So there may be opportunities for strata ownership in nearby communities that investors should be looking at that can be affected as this plan comes to fruition.
Yeah, and I think also, just on a smaller scale, there are existing strata retail and office products along Broadway, and so to purchase that now, and the plan is underway. The Skytrain is the subway is almost complete, and to take that ride as well, where we are going to be seeing an increase in lease rates. I think Broadway has been hammered over the past few years, especially with the construction, the demolition clauses for a lot of the retail spaces and office. And now that we're coming through the end there, I think, purchasing a strata retail unit or a strata office unit, there is an upside there on the rate because the area will eventually change and the construction is nearly done. So, I think that, if you're looking to invest in the area, definitely a good time to purchase.
And on that strata note as well, and per Meg's previous appearance on the podcast, there are a lot of aging stratas that fall within the Broadway plan. So it was somebody who typically invested in residential condos and rented out to a tenant. Not only will there be very strong demand to rent it out to people, but you could benefit from a future strata wind up as looking along 11th and 12th, 13th on the west side. There are a fair amount of 3-story, severely aging strata buildings that, in all likelihood will see a strata wind up in the next 10 years. And you could see a nice lift on your money through that process.
Yeah, exactly. And a lot of these stratas know that as well now. We've been invited to pitch and get into conversation with many stratas in the area. And typically a strata winds up, as Meg said in the previous podcast, because there's deficiencies in the building. It's falling apart. But we're also getting calls just on the redevelopment potential. So these are buildings that are, still holding up well, no overlooming special levies. And they're curious to see what their lifts might be. So there's a lot of bullishness from owners in the area now. So that could be a good opportunity over the course of the plan.
Well, guys, thank you once again for your time. We know you guys are super busy. A lot of great insight unwrapping all that stuff. Kidding. But before we're going to let you guys go, you guys know what we have. We've got the 6-pack, 6 lighthearted questions, so we get to know you a little bit better out of the office. But in light that we have 3 of you on the call today, and tomorrow the William Wright Whistler retreat starts, we're going to do the 18-pack today. We're going to do the 18-pack today. So, the 18-pack. And that's questions for everyone thinking, not beer, questions. Questions. So the 6-pack is powered by our great friends over at Red Point Law.
Oh, the guys at Red Point Law are fantastic, Cory.
For all your legal needs when it comes to commercial real estate, visit them at redpointlaw.ca. All right, guys, first question out of the gate, and we'll give you each a chance to answer. What's the first thing you're going to do when you arrive in Whistler tomorrow?
Well, I'm going to have a Caesar, I think, at 10 a.m.
Yeah, the plan is to go up early, get some brunch. Mimosas were on the table, but hearing about an 18-pack, might inspire some different options. Yeah.
Well, I don't know about these 2 alcoholics that I'm with, but I'm bringing my laptop and I'm getting right to work. No, I'm kidding.
I was just going to say, Seamus, you're going to get a promotion come Monday, but okay, keep going. Awesome, guys. Next question up for you. What are you binge watching on Netflix right now?
I'm actually rewatching Narcos right now. It's an older one, but definitely holds up on the rewatch. I've been really enjoying that. And, interesting part of history.
I'm on Ozark. And it is, I rewatched it because it's been so long, but pretty juicy.
Interesting. I just cleaned up with Succession. Great show. Back on Suits. It's just
that's Cory's favorite. You're speaking.
Yeah, I know.
Everyone's getting a promotion but me.
We're going to ask you your favorite band is pretty soon.
That's
you got an opportunity with the band. What is question 3? Favorite band that you're going to be playing loud on the Sea to Sky Highway tomorrow morning?
Nickelback.
I'd like to welcome Liam Simpson, the new president of William Wright Commercial.
I've been listening to a lot of Broken Bells lately.
Interesting.
I'm very much on the oldies. Probably my favorite band is Hall & Oates because I'm a cheese ball. So I'll be listening to that on the way up.
Yeah, they're good.
Hall & Oates, nothing wrong with Hall & Oates.
Yeah, no,
it's funny because
nothing right about it either. But
not saying they're great, but Matt over here will be listening to Air Supply on the way up tomorrow. All right, coming off the back of that one, you've had a couple drinks now in Whistler. You're feeling really good about yourself. Someone sticks a karaoke mic in front of you. What song are you singing?
I think we all sing. What's that? For the Longest Time?
Yeah. For the Longest Time.
Our team is very musically inclined, and we've figured out the harmonies to For the Longest Time. So we'll be singing that.
Do you want us to do a little
I'm just going to say, if you guys
for those that don't know the song.
Can you do a little a cappella here for us?
That, guys. It's not free. Okay?
Last but not least, and thanks again for all your time here today. Favorite restaurant or bar?
And we can do the Whistler edition of this if you want, in honor of the
Longhorns.
So favorite restaurant or bar in Whistler?
Mine would be Dublin Gate.
Oh.
Okay.
It's just so homey, and the mahogany is so rich.
I think I have to come in with Longhorns. It's just the environment for me. I don't think I've ever actually eaten there. I think I hear the food is great, but it's a great spot.
I didn't even know they had a kitchen.
Exactly.
For me, I guess I'll go Carumba for the nostalgia factor. They've been a Whistler staple for my whole life. Been going there for dinner since I was a little kid. And when we were up at ICSC this year, we did a little revisitation of that restaurant, and pretty outstanding food still, and good drinks too.
Hold up.
Yeah, great pizza.
Now, does Carumba still have the calamari, like the really, really good calamari they used to have that doesn't have any of the batter on it? Like it's just kind of the diced up?
Absolutely.
That's worth it right there.
And I'm so glad you said that, because that calamari is absolutely to die for.
Well, maybe we'll have to sneak our way in there this weekend after golf. Guys, thank you once again so much for your time. How can our listeners find out more about what the three of you guys are doing?
Yeah, so they could email me personally, liam@williamwright.ca, meg@williamwright.ca. And yeah, shoot us a question with anything Broadway, anything strata wind-up, anything to do with land and development. More than happy to hop on a call and walk anyone through a process.
Fantastic. Well, thanks again, guys, for your time. That was great.
Thank you, guys.
Yeah, thanks for having us.
And there you have it, folks. Our interview with Meg Cooney, Liam Simpson, and Seamus Bailey, all from our William Wright Commercial Vancouver office, unpacking the Broadway plan from a commercial perspective.
You know what I like? I like having three people on the show where they can kind of feed off each other.
Yeah.
You know,
Yeah.
and fill in the gaps of each other's answers, adding on that, piggybacking on that. But man, really, really interesting stuff. And you know what, Cory, I was kind of depressed after I engaged Meg, Liam, and Seamus, but you did bring me back to reality and put it in context. These things take time.
Yeah.
And, you know, that vision, next stage is where the rubber hits the road, and we'll see how it plays out. But Rome wasn't built in a day.
No, it's going to take some time. And again, there's been a lot of controversy over this. There's been a lot of support, depending on who you talk to. So it'll be really interesting to see how it plays out. Probably, like I said earlier, probably the biggest decision the city of Vancouver's had to make so far, in my opinion, just based on the size of scale and the opportunity or lack thereof that might come through on this. So it'll be interesting to see how it plays itself out.
Absolutely. And what else do we have before we head to Whistler, Cory? We have William Wright Commercial.
People can reach us anytime at our Vancouver office at 604-428-5255. Give us a call. Let us know your needs. We'll put you in touch with the best broker that we feel fits that anywhere throughout the province. They can drop me an email, Cory@williamwright.ca. Always happy to hear what people feel about the show. I love it when listeners reach out and they tell me the good, bad, and the ugly. And then on top of that, they can visit our website, williamwright.ca, anytime. Sign up for the latest and greatest news.
Fantastic. We also have VancouverRealEstatePodcast.com. This is where the Vancouver Commercial Real Estate Podcast lives. I was just thinking about it, Cory. If you listen to this show and you were like, man, I don't have time to listen to Kit Sauter on the Vancouver Real Estate Podcast, but I want a summary of what he said about the Broadway plan, it lives at VancouverRealEstatePodcast.com. We have summaries. We have all the episodes for both shows. It's where all things real estate related live. Head over to VancouverRealEstatePodcast.com and the 18-pack. Let's get going.
Yeah, speak for yourself. I have about half of one of those 18 packs there, about maybe half a beer, and I'm probably sleeping. So there's 17 and a half left for you.
All right. We'll be back next week. Well-rested and ready to go.
All right, guys. Thanks so much for listening. Take care.
Take care.
Subscribe today.